Did you know the Ghanaian cedi is facing renewed depreciation pressure as demand for the US dollar continues to outpace supply, prompting the Bank of Ghana to roll out another round of foreign exchange auctions worth up to $1 billion dollars in August 2026. The planned intervention by the central bank, which will be undertaken through the bank's forex intermediation program, is expected to provide much needed dollar liquidity to licensed commercial banks and help stabilize the local currency amid demand from businesses. So, yes, that's how we start the show. Hello, good afternoon, and welcome to the Afternoon Business Review here on Class 91.3 FM, where we tell you what moves money and markets. My name is Agyemah Prempeh and welcome on board, and this is how we start the show today. And let's start with our regulars. Let's check how much crude oil, gold and cocoa is being pegged or sold on the international market. And crude oil has dropped by $2 and is selling at $76 per barrel, down from the $79 it sold yesterday. Gold is pegged at $4,170 per ounce, up from the $4,060 per ounce it sold yesterday, so it has increased by some $110. Cocoa's price at $6,125 per metric ton, up from $5,840 per ton it sold yesterday. So $6,125,000 per metric ton, up from $5,840,000 it sold yesterday. It has increased significantly by about $285. Now, if you're looking to change your dollar, euro, or pound, I'm here to give you some update on that. So, according to the Bank of Ghana's exchange rate, the dollar is selling at 11 cedis 72 pesos and it's buying at 11 cedis 71 pesos. The pound is going for 15 cedis 77 pesos and is buying at 15 cedis 75 pesos, whereas the euro is going for 13 cedis 50 pesos and is buying at 13 cedis 49 pesos. Remember, these rates could be slightly different at the various forex bureau and banks. And as we do say always on the show, don't go to the black market. Neither should you go to Accra, to the Circle, airports, you name it. Don't engage any middleman or guru boy. Go to a licensed, credited forex bureau, any commercial bank of your choice. Now, Caitlin Dazi of Data Bank is on standby with stock updates.
The stock market closed higher today, with 7 laggards outnumbering 3 gainers. The top gainers were MTN Ghana, Zen Petroleum and Hordes, while Atlantic Lithium, Enterprise Group and ETI declined. Driven by the price moves, the Ghana Stock Exchange Composite Index surged to a year-to-date return of 75.45%, while the Databank Stock Index declined to a return of 89.48%. MTN Ghana traded the most, accounting for 84.32% of the market turnover after trading 4.82 million shares across 25 counters. For Databank Research, Caitlin Dazi.
And yes, in the studios of Class 91.3 FM, my name is Agyemah Prempeh. You're still listening to the Afternoon Business Review. Here, it's now time for us to dash straight into stories shaping both the local and international economies. And let's start from Ghana, as the Abosokai Spare Parts Dealers Association has defended the varying prices of spare parts, insisting that it has no mandate to fix prices for dealers. According to the association's public relations officer, Techiado, the dealers source products from different markets and operate under varying financing and import costs, which influence the prices they charge customers. His comments come amid renewed concerns over the rising cost of vehicle maintenance following the Ghana Private Road Transport Union GPRTU's proposed 30% increase in transport fares, which attributed partly to high spare parts costs.
Nobody, no, the association, we don't have control over somebody's prices.
So what is the essence? What is the essence of the association then?
No, because you know what? Before you can regulate somebody's prices, it means that you have control over that person.
Okay.
The control is association. We are there to support the association to the members, but we cannot regulate because when you are getting a loan from, you don't know.
Okay.
Because you don't know the bank you are getting a loan from, you don't know. You don't know how much interest you are paying. So the problem is that's why I keep on saying that we need the government support in the spare parts industry. We need soft loans that the government can say, look, I've intervened, I've given soft loan. So whatever you are doing, try to adjust your prices. Do this. The association will make sure we regulate the prices. But now that, no, I'm getting my loan from maybe EcoBank. You are getting yours from a Stanbic Bank. The interest rate is different. You understand? And where I'm getting my spare parts from is different from where you are getting your spare parts from. Some from Europe, some from Asia, some from Anglo-America, which is America and Canada. So it's different. The spare parts business, KOJ, is different from cement or rice or, I don't know, or oil.
Techiado is the public relations officer for the Abosokan spare parts dealers, and you heard him in an interview there with Class News' Kwame Ochi Jr. KOJ. Now, the surge in global cocoa prices is expected to provide some relief for Ghanaian cocoa farmers, but many producers may still record lower overall incomes as a declining harvest offset the benefit of stronger international prices. Following the Ghana Cocoa Board's announcement that cocoa production could significantly fall during the 2026-2027 crop season, global cocoa prices climbed sharply amid concerns over tightening supplies. Meanwhile, while higher prices improve the potential value of cocoa exports, analysts argue that farmers are unlikely to reap its full benefits because they will have fewer beans to sell. The following report tells us more.
By the morning of Monday, August 3, global cocoa futures were trading near $5,664 per metric ton for New York contract and around €4,009 per ton for London contract, driven higher over the past few days by the announcement from Cocoa Board. Ghana's upcoming production shortcomings are being attributed to the combined effect of swollen shoots disease, aging cocoa farms, and the likelihood of adverse weather from El Nino weather pattern. Prior to the latest announcement, cocoa prices had been under downward pressure over the past 2 weeks and posted 4 weeks low on Tuesday last week, July 28, on signs of larger global cocoa supplies and amid uncertain demand. The previous day's cumulative data from the Côte d'Ivoire showed that farmer shipment of cocoa to port in the current marketing year, October 1, 2025 through July 26, 2025, were up by 21% from the same period a year ago. Also, Bloomberg reported on July 16 that Nigerian cocoa exports in June rose 30% year-on-year to 18,922 metric tons. Lower cocoa production in Ghana during the 2026 and 2027 crop season is likely to produce a paradox for Ghanaian cocoa farmers, who are now guaranteed by newly passed legislation 70% of the free on-board global price of their cocoa. Higher global cocoa price will improve the value of the crop they do harvest, but many farmers will still earn less overall because they have fewer beans to sell. The net effect will vary considerably between farmers depending on their yields, farm size, disease incidence, and the government producer price policy.
So that was the news report. Now, following the passage of the Cocoa 2026 Cocoa Bill in Parliament on Friday, 31st July 2026, and we know that yesterday on the show, we discussed this issue that the Deputy Finance Minister, Thomas Nyako Ampem, said the new bill was going to pave the way for major reforms in Ghana's cocoa sector, including a guarantee that cocoa farmers will receive not less than 70% of the free on-board FOB export price by Cocoa Board. Speaking on the afternoon business review yesterday, the co-coordinator of the Ghana Civil Society Cocoa Platform, GCCP, a cocoa think tank, Obed Owusu Adai, welcomed the move by the House by government, but thus questioned some conditionalities in the bill which prohibits farmers from diversifying the use of their farms or cocoa lands.
The first thing that we have realized when you look at clause 80 of the new Cocoa Board bill, they are designating cocoa farms as protected farms. the technology they are using is protected farm. And then when you come to 81.1, they are designating or they are explaining what you can do and cannot do in a protected farm. And one of the key challenges or problems we are having is that the law under clause 81.1 is saying that when you have a cocoa farm, you cannot convert the cocoa farm to any other farm, except if you write to the Minister for Finance for approval before you can change your land use. What this means is that this bill or this Cocoa Board Act is indirectly contravening existing land use plans or land use laws that are in the country. For example, if I'm a farmer, I go to a landowner and acquire a land to make a farm, I should have the liberty and the freedom to change the crop I want to change. You can't tell me that produce cocoa all your life and that you don't have the authority to change from producing cocoa to any other crop, except if you have written to the minister for his approval before you can change that. We think that is wrong and that is not fair to the farmer, especially in the face of what we as sector players, we are preaching to the farmer that they should diversify. We are telling cocoa farmers that you cannot depend on cocoa all your life. You need to diversify so that in seasons that cocoa doesn't do well or the price is low, you can have other crops to augment your household income.
So that's Obed Osu Adai, who is the co-coordinator of the Ghana Civil Society Cocoa platform. Now, on the international front, Brussels Airlines reported an adjusted EBIT loss of 70 million euros for the first 6 months of 2026 as sharply higher fuel cost, an Ebola outbreak in East Africa, and labor disruptions in Belgium offset stronger passenger volumes and improved operational performance. The result presented a 50% deterioration compared with the corresponding period of 2025. That's according to the airline, underscoring the pressure that external shocks have placed on profitability despite continued growth in traffic and revenue. Brussels Airline carried 4.50 million passengers across 34,200 flights during the first half, representing year-on-year increase of 8.10% and 5.50% respectively. Revenue rose 9.50%, suggesting that underlying demand remained relatively resilient even as the airline's cost base came under pressure. Brussels Airlines said fuel expenditure increased by 64 million euros compared with the first 6 months of last year as unrest in the Middle East pushed oil prices higher. That increase alone, according to Brussels, was equivalent to more than 91% of the carrier's 70 million euro adjusted EBIT loss, illustrating how sensitive airline profitability remains to movement in global energy markets. So that's the 4 stories shaping both the local and international economy. So you're still listening to the Afternoon Business Review here on Class 91.3 FM with me, Agyemah Prempeh. It's now time for us to move straight into our big conversation for today. And today's Wednesday, yes, is a midweek editorial session here on the show. And today we're discussing the rise and fall of fuel prices for the first pricing window of August 2026. So the first pricing of August 2026 opened on Saturday, August 1, 2026. The new price brought an uproar on both social media and the street, with commercial transport operators threatening to increase transport fares by 30%. As a result, the Institute for Energy Security called on the government, the IES called on the government to step up and also to step in to alleviate the plight of transport operators who are under pressure to increase transport fares, because they were hinting that diesel that they normally use would potentially hit 18 or 19 cities. So they threatened that they were going to increase transport fares last Monday by some 30%. So let me take you back and refresh your memory on this whole conversation. And it has run through 12 Live 505 at 6 a.m. here on this dial. So today on the editorial review on the afternoon business review here on Class 91.3 FM, which is quite a mouthful, we are trying to refresh your memory and bring you up to speed or catch you in all that happened from Monday to now. So let's hear from the lead researcher at the Institute for the Energy Security IES, Prosper Smith, who has been speaking with Class News.
In terms of petroleum products, export prices of these products. And if you look at what we are paying for diesel now, we are paying a difference of 1 cedi 25 pesos. And that of diesel, we are paying a difference of 2 cedis, 62 pesos, the highest in the last three pricing window so far. And that obviously captures, because crude prices is in futures, this pricing reflects the high prices that preceded us some few weeks ago. And so those stocks now will have to sell at this higher rate to be able to recover their operational costs and the likes. And so this is mainly a direct reflection of what we are seeing in the market in paying this higher prices. So if you look at the MPA floor price now, for that of petrol, it's 14.53 per liter, and that of diesel is 16.97 per liter. So that is just largely a reflection of what the market, international pricing has been in the market largely.
Diesel is taking the heaviest hit at over 12%. Why is diesel being hit harder than petrol and LPG? What's driving that specific disparity?
Yes, as it is, diesel is much expensive, much heavier to refine. The cost is a bit higher compared to that of petrol. Its industrial use to gives it, a competitive edge to that of petrol. And so, obviously, the cost of getting gas oil through its refinery is a bit higher compared to petrol, which is much lighter. And so that informs the dynamics in mainly the primary factor in determining some of this cost, as it were. So it presupposes that we are supposed to see an increase in fuel prices from the OMCs, and that will give a call to transport operators to maybe also look at pricing adjustment. But all boils down to what government wants to do in the wake of this new hikes in prices, whether they will wait to weather the storm as to what the next pricing window will be, or they will want to step in now, as indeed they did earlier, through the course of certain institutions like IES and other stakeholders.
So you had Prosper Smith, who is a lead researcher at the IES, and he said, and that was on Monday on the Class Morning Show with Charles Okrofi. Prosper Smith said, now the onus lies on the government to do something. And that same Monday, the government also released a statement, and this the statement was from the presidency, I should say, and it says President Mahama orders 2 cedis reduction in diesel price. So let me read the statement, which was signed by the spokesperson to the President and Minister of Government Communications, Felix Kwachiofosu. It says, His Excellency the President has directed that in line with the decision of Cabinet and the successful intervention implemented in April 2026, the regulatory margin on the diesel be reduced by 2 cedis per litre for 1 month. This temporary intervention is intended to cushion consumers, prevent transport fare hikes, contain inflationary pressures, and mitigate the pass-through effect of higher prices on the cost of living. And this was all comes on the back of calls by think tanks, by industry players for the government to do something. So the president or the government released a statement, and From that, the NPA, which is the regulator, she said the National Petroleum Authority also released a new price floor. So the price floor for petrol, according to the NPA, was set as at 14 cedis 53 pesos per liter, representing a 9.41 percentage increase from the previous price. So the Chamber of Petroleum Consumers (COPEC) welcomed the president's directive to absorb 2 cedis on every liter of diesel, describing it as a positive development. But they warned that the government should not rely on short-term interventions. According to COPEC's executive secretary, I should say, Duncan Amoah, the intervention was necessary given the steep rise in diesel prices, which had approached 20 Ghana cedis per liter at some pumps. So we can also hear from Duncan Amoah.
Already, in fact, that the consumer will save on diesel, so has been much before that. And so for those times, the government is not one that government should rely on. Government should quickly find a way to move towards a strategic reserve program module, which then allows government to squeeze something within the taxes throughout the year, save something, and save or store fuel as and when prices are favorable, so that government can use that fuel that is bought at lower price when prices are favorable to intervene in the market when prices get a bit steeper. These interventions we are seeing, like I indicated, positive, but it could be short-lived because, again, it is going to cost government some revenue that it clearly wouldn't have taken a loss. Clearly, if you see the trend of increases for petrol and diesel, what you were seeing with diesel was quite alarming or staggering. A situation where the person driving a diesel engine is paying 19 Ghana cedi, approaching 20 Ghana cedi, whereas the one paying for petrol was paying about 14, 15 Ghana cedi. A variance of almost 4 Ghana cedi was quite significant. And so I was not surprised government took the intervention on diesel, although I would have wished that some 20 pesos could equally have been given to the petrol users so that they also get some relief and feel that impact in their pocket. But it is simply down to the trend. If you look at how fast the prices of diesel were going, if you were to take that decision as a president, I'm sure your call will be to ensure that those paying super high for diesel.
So you heard Duncan Amoah, who is the Executive Secretary of the COPEC, Chamber of Petroleum Consumers, Ghana. And I mentioned that following the opening of the first pricing window of August 2026, commercial transport operators threatened to increase transport fares by some 30%. But due to the intervention by the government, absorbing 2 cedis from diesel prices per litre for a month, the Ghana Private Road Transport Union (GPRTU) suspended its planned transport fare increase following the government's intervention. The union says although drivers continue to face high expenses, increasing fares immediately could worsen the burden on passengers and create further challenges. And the Deputy Communications Officer for GPRTU, Samuel Amoah, has also been speaking to Class News, or he spoke to Class News. Let's take a listen.
Our decision of coming up with the increment, after the president's intervention of reducing the diesel by 2 cedis, and then according to the president, they are going to make sure that for 1 month, these 2 cedis will be reduced from the petroleum, that is the diesel. That is for 1 liter, and it means that if a driver buys 1 gallon of diesel, is saving 9 Ghana cedis. Actually, we find out that yes, where the fuel price has gotten to, still the drivers are still suffering, and by the close of the day, their expenditures goes very, very high. But then we also thought it wise that increasing the transport fare right now will also push everything to just go up, and it will go and come back and hit us.
So that's the Deputy Communications Officer of the Ghana Private Road Transport Union, Samuel Amwa. So today, this morning, before I got to the office class business, for the afternoon business review, we decided to do a market scan of the various oil marketing companies in the capital to check the current fuel price for petrol and diesel. And for Goil, this morning, Goil is selling petrol for 15 cedis 99 pesos and diesel is going for 17 cedis 26 pesos. So it means that 2 cedis is actually taking effect in terms of diesel. For Total Energies, petrol is going for 16 cedis 29 pesos and diesel is selling at 17 cedis 49 pesos. Shell is selling petrol for 16 cedis 29 pesos and diesel for 17 cedis 49 pesos. Star Oil is selling petrol for 14 cedis 53 pesos and diesel for 16 cedis 97 pesos. And Petrosol is selling petrol for 15 cedis 98 pesos and diesel for 17 cedis 98 pesos. But mind you, NPA's fuel price floor for petrol is being pegged at 14 cedis 53 pesos per liter and diesel 14 cedis 97 pesos per liter. So it means that the 2 cedis the government took off diesel is currently actually taking effect at the various OMC. So that's how we wrap up today's edition of the Afternoon Business Review here on Class 91.3 FM. Unfortunately, our time is up. Catch us same time tomorrow from 12:30 to 1 p.m. with me, Agyemah Prempeh. We wrap up the week in a grand style as usual. And as always, we say you don't need a dictionary to understand business news. Good afternoon.